We just presented on our digital transformation story. GE has gone through that over the last year in the Treasury space, specifically looking at cash management and really taking kind of baseline processes in the company and really using digital as a transformation and accelerator to get us to target state.
Getting started is the most difficult part of any process, and also Treasury needs to be part of the larger finance and CFO organization. It's very difficult to go it alone. SAP has this, and other processes have this term, quote to cash. So anything you're doing is touching so many different parts that you need to go in it together. And then you're getting into some type of culture change and process change. So even though the intentions are good, it becomes very complicated and you have to have a lot of variables to move forward.
So the impact of delivering a digital treasury is very much around operating leverage and bottom line impact to a company, in that you can automate a lot of otherwise manual processes such as forecasting and cash management, leveraging automation and machine learning behind it. There's many ways that can be tackled. I think you can build that proprietarily if you have the right engineering resources in your company. I haven't seen too much by way of automation from third-party platforms as of yet.
I think the risks that have really kind of elevated to the top over the last couple of years are really related to cyber. Cyber with respect to not only our own internal environment, but again, we've seen a lot of the breaches that have happened have been through vendor backdoors. Cyber takes on a broad range of potential implications for companies. And then for Treasury too, there's so much new technology out there, and not really understanding what risks those may bring with them. I think that's something else that we're going to have to start taking a look at.
So it's a changing world. You can see more and more consumers using their own wallets, or people that would like instant payment. Treasury needs to create some more controls over more real-time transactions than the traditional statements that they were using to track. So it might be that Treasury needs more analysis in their work, more reconciliation, more support of different platforms to accommodate to the new needs.
I think a digital treasury is something that has been a little bit of an evolution for traditional corporations over some time, focused initially on automation and how to remove people. However, the true step change that's coming in digital treasury now is the ability to actually look with a completely fresh pair of eyes at how cash forecasting, how various other working capital decisions can be made, but be made through automated, decision-based systems and technology that support the department, rather than manual processes from the past and rather from traditional ways of making decisions in the Treasury Department.
FinTech allows mass payments in a very streamlined process where you don't have to go to the traditional route where you're processing things from multiple banks in multiple payment forms such as wires, ACHs, EFTs. With FinTech, you can really streamline it just by uploading a single file and having some program in the background determine all that other stuff for you. So it should really simplify things. It's really important to have that level of cooperation and also communication with your financial partners to make sure that everyone's on the same page.
I think FinTech has already started to impact Treasury around the edges in terms of fun things like cash flow forecasting and really visualizing data in more interesting ways, and starting to think about new ways of managing payments. It's been kind of around the edges. How do I manage payroll in a country that's, for example, heavily reliant on cash? Prepaid card solutions have been a big part of that. I think blockchain itself is still very, very early, but I think there are interesting ways in which, again, you're seeing that at the edges of Treasury, where people need certainty about when a payment is going to arrive or how much it might cost when it gets there. I think the technologies that Treasury should consider investing in and evaluating first and foremost are getting to the cloud. So if you're moving your ERP, how can I really focus on having that as simple as possible and as extensible as possible? I want API access to that thing so that I can plug in, plug out, and start to have all of the advantages of all of the innovation that sits around the ERP, which is still the beating heart of Treasury. And then once I've got that, then I can start thinking about, well, what's going to help me manage my liquidity, what's going to help me reduce risk, and really what's going to give me that increased certainty that I know what's happening. And I think blockchain and DLT are probably the area where that's going to start to happen. How will blockchain impact payments, and in what time frame? How will it impact it? It will start at the fringes. It will start with some small corridors in terms of maybe it's Southeast Asia, maybe it's Korean won to Japanese yen, maybe it's those sorts of things where clearing through the US dollar is not necessarily efficient. From a time zone standpoint, it can be quite difficult because of cutoff times. So managing those sorts of payments are areas where blockchain and DLT are really kind of come into their element, and it's actually already happening. So I don't think it's when will it happen, that's already happened. But the question of when will it happen for you, that's an interesting question for each corporate treasurer to think about in terms of, well, where are those edge cases for me, and can I leverage blockchain to solve some of those pain points around those edge cases?
If you're a more established organization that's used to legacy ways of doing things or legacy infrastructure, making sure that you have the leadership buy-in to kind of get the resources that you need, particularly if you can make the case of how much operational leverage and cost savings it could bring to the company, and also reduce risk to the treasury function itself, right? If you have more automation and controls in place, there's less lapses that can create financial losses for the company. So I think culturally, getting the leadership buy-in, getting the resourcing, and really being at the front line or the commercial line of the business and being at the table and being part of that conversation is very key.